Hey guys, welcome back to another video. Today we'll be doing an analysis on Shopify Inc. So for all of you unfamiliar, Shopify is a company centered around e-commerce. So as always, let's start off with the PE ratio. It's currently at a 62.26, which is not too good. The goal is to look for companies with a PE of about 20 or less. This is something important to look at because it shows how risky the investment will be. So the last thing I want to look at on the overview is the dividend. So they currently don't offer any dividends, which is fine. It just seems like they'd rather reinvest the money back into the company. All right, so getting into the income statement, I want to begin with the revenue. So as of the most recent year, they're bringing in about 2.93 billion in revenue, which is up about 2.54 billion from 5 years ago. So this is a huge increase of about 652%. The next thing to look at is their net income. So Shopify's net income growth over the past 5 years is a little shaky. Every year it has been getting worse and worse. Then the last year it jumped to over 300 million. So this is a great increase to see as the net income does show you how profitable the company is, but I want to see this continue to increase for at least another 2 years or so. The last thing to look at on the income statement is the shares outstanding. So this is something you want to see decrease. The more it goes up, the less your shares are worth. As you can see, it goes up every year. So this is a huge red flag as there is no indicator that Shopify will be buying back shares anytime in the near future. Next thing to look at is their balance sheet. So as you can see with their current assets, it has doubled every single year. So this is really good to see as they now have 6.88 billion up from 422 million just 5 years ago. Now I want to look at their current liabilities. So these seem to be looking okay. The good thing I want to point out though is that they have about 6.88 billion more in current assets than current liabilities. Also remember this number right here, 438 million. So if we scroll up to their cash, they have 2.7 billion right now. So that means they can easily wipe out any current liability if they needed to. This is always a nice bonus thing to see when analyzing a company. The last and one of the most important aspects to look at in any company is the free cash flow. So they had 3 negative years in a row, which isn't good, but they followed it up with 2 consecutive increases. Hopefully, we can see another 1 or 2 good years with this. So cash flow is important because companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest into future growth, or pay dividends. So this is clearly something you want to see be improved on year after year. In conclusion, Shopify looks like an okay company right now. Their balance sheet looks really good and their cash flow statement seems to be improving. The one bad part of the company, I would say, is its income statement because of how their net income hasn't shown any positive consistency. And also, their outstanding shares keeps going up every year. I do want to make it clear though, before I end the video, that my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the areas I cover, then I tend to stay away. Anyways, guys, I want to point out that I am not a financial advisor, so I recommend doing more research before coming to the conclusion of buying or selling this stock. If you have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching and have a nice day.